Okay, so I'm going to discuss May-June 2022 paper variant 1-3. So let's look at the first one. Which tasks will be carried out by a bookkeeper? So they always first question asks about whether bookkeeping or accounting, right? And what's the bookkeeper's jobs and all. So bookkeepers covered from business document, books of prime entry, ledger, and trial balance. So these four. An accountant do the financial statement part, but it does sound like accountant only do one part, but actually accountant have to do like decision making, analyzing, explanation, ratios, prepare the statements and also there's actually a lot of things. While bookkeepers is only part of the recordings only. So in this case, the answer would be donkey, just recording. The rest are all done by the accountant. Right. Next one will be question number 2. So when you encounter question like this, like T account, so which statement is correct? You need to know which account you are dealing with, like who is this person. So there's two ways to see this because balance BD is on the right side starting. So always remember that in the T account, when balance BD is on the right side, it means we owe people. Balance BD left side is people owe us, right? So who do you think Amras is? Is someone that we owe them. So definitely this person is a trade payable. Okay. Or another way you can see this is look at the purchases, right? Purchases, then it has to be linked with supplier. What do we buy from supplier? So therefore, which statement is correct here? Amras is allowed trade discount. No, we don't record trade discount inside T account. So there's no trade discount. And then Amras owe, so it won't be supplier owing us. And C, Leah owe Amras on 30 April, which is technically after balance CD. Then it will be balance BD, just that they didn't show. Okay, 2950. So that means we owe people, right? So Leah owe Amras. So answer is donkey. Okay, and net purchases is calculated by using purchases minus purchases return. That is net purchases. Purchases minus purchase return. So in this case, then should be 3,000 minus 150. It should be 2,850, not 2,900. So that's why answer donkey is out. Okay, next one. Then we have Sarah sold goods. So in this case, you all should know by now that there shouldn't be, because since we are Sarah, so there shouldn't be any Sarahs inside the answer. And sales ledger, what's inside sales ledger? Sales ledger in there, there's no sales account one, yeah. It's like fried rice without the rice. So in this case, sales ledger is actually the TR, okay? And therefore, you know automatically that in the sales ledger, there shouldn't be any sales account. So answer C and D is already out. And so it's under either A or B. And by now, also, you guys should know that sales account in double entry, sales is always credit. So therefore, answer must be A, because you can't debit sales unless you are doing error. But this is not error questions. Okay, question number 4. So here we have Omar and Miriam, and we are Miriam. So if we are Miriam, that means Miriam won't be in the answer. Okay, so B and D is out. So it's either A or C. And by understanding that purchase return is always CR, okay, so answer it must be C in this case. Okay, so there's a credit note. So even though you don't read the questions, but please read the question. But sometimes if you are very good with things like this already, you are very familiar, you can straight away answer. Okay, number 5, Ben sold goods and for cash. So there's a cash involved, books of prime entry, anything to do with money, go to cash book. Simple question. Okay, petty cashier received 100 and also $10 from the employee who had made private call. So how they record this in the petty cash book and cash book. So we are petty cashier in the petty cash book, then we should receive 100 and also the $10. That means it has to be debit petty cash. So answer is only donkey, 110. The only answer. Why they credit 100? Because of restore, right? Restore, so the money can have to come up from the petty cash book. Sorry, from the cash book, which is only the 100. Okay, for compensating error, in this case, you need to understand that all the example of all the errors. So please refer back to the notes I have. It has all the example how they sounds like. So donkey, compensating must have 2 or more errors, and that will be undercast and overcast. So these two, they neutralize each other, they cancel out each other. This side is compensating. Okay, for part A is actually, if you notice, one is repair, one is office equipment. This is actually error of principle. Okay, because it's wrong class. C. Jones and C. John name is wrong, so commission. And then the other one is the number is wrong, entered in the books. they entered in the books at 56, so both also wrong. When both amount is wrong, that is original entry. Okay, so make sure that you guys study your errors, because since paper 2 did not come out for this year, 2020, October, November, paper 2, variant 3, there's no errors, right? So better be prepared for errors in MCQ. So next one is correcting. Correcting, and what's the effect after you fix these two errors to the NCA and working capital. So make sure you know the formula for working capital. So CA minus CL. Okay, and the first one, buy machine by bank transfer was omitted from the account, means totally didn't do the whole thing. If they totally didn't do the whole thing, that means they just need to put it back now, right? So it's omission, so debit machine. Do not use purchases, because purchases is only for goods. And then after that, you CR bank. So in this case, you notice machine up and bank is current asset, it went down, right? So definitely, if it went down, then your working capital, hold on, let's do the second one also. So motor vehicle was entered in motor vehicle repair. Okay, so how to fix this is like, this is actually error principle. So the correct one is supposed to be debit motor vehicle and credit chinchala cash. But now what is wrong is, instead of doing that, they went and debit repair. And let's say we see our cash also. So in that case, we can cancel out cash, because cash nothing is wrong. So to fix this, technically you just need DR motor vehicle and CR repair to fix this. So since repair has nothing to do with working capital and non-current asset, it's only motor vehicle. So motor vehicle is asset, we need to put it back, right? So MV plus machine, these two together, 15,000 plus 5,000, they will be increased by 20,000. So answer is either C or D. So is it working capital no effect or decrease by 5,000? Because bank, all right, we paid bank, so current asset went down, so CA went down. That's why it will decrease by 5,000. Answer is C. Okay, for this question. So yeah, you have to fix it first to see the effect for yourself. All right, next one is a sales ledger control account. So why is it done by a different member? So yeah, control account is done by other people, so that if you notice ABCD answer is all the advantages to control account, right? They are all advantages, but why is it must be done by someone else? Is because it's so that we can deter fraud, right? Even though we can't really like deter or avoid fraud, but that's the only answer that it makes sense here. Okay, number 10, what will be recorded in the credit side will carry sales ledger control account. So you notice question like this sometimes ABCD, right? So there will be 3 answers is like common things, and 1 will be the odd one. So if you are familiar and you know which one is the same one, then you will answer straight away. Okay, so in this case, answer is donkey. Why? Because sales return in double entry is DR, but when you change to T account, it will be on the other side. Even though let's say you're not sure, then the best will be just make sure that you know all the double entry here lah. So cash refunded from TR. Cash refund means we DR cash, we receive cash, and we CR TR. So sales ledger control account is actually TR. So we focus on TR side, that will be CR. Credit sales, definitely sales is always CR, so that means TR and CR sales. Okay. Oops, where are credit sales? Oh, okay, so they want credit side. So cash refunded to credit. So I'm so sorry. The first one said wrongly. Cash refunded to TR. So it's supposed to be CR cash because we give back the money. Okay, we give back the money and then debit TR. Okay, so the side is on the left side. Interest charged on overdue. So we are charging the customer. If we are charging the customer, the interest is income to us. So income is, in this case, on the CR side. And then after that, what we debit is we debit TR. Okay. So you see all of these are on the debit side, and while sales return is TR sales return, and we CR TR. So the only answer that is on the right side is sales return. Okay, 11. So we have draft statement profit 38750. Maria received a 5% bank loan, but it was treated as a revenue receipt, and revenue receipt means it's like income. Okay, it's technically we treated it as income, like a sales or other income, which is wrong because it's a loan. Loan is not income. Okay, and then on top of that, there's an interest also on this loan, the 5%. But then they include the whole year, which is not supposed to, because the year end is 31st March 2022. We only gotten this loan from December 31st. That means there's only 3 months, that is from January, February, and March. So there should be only 3 months. You shouldn't include the whole 12 months. That's what they're trying to say. So we have to find the correct profit for the year. So what do we do now is, technically, this thing, we should start off with the number 38750. And because the income shouldn't be there, right? It was incorrectly treated, so we should remove the income first. That means we need to minus 4,800. Okay, and for that interest, okay, because interest is expenses, right? And they included the whole 12 month there, so you have to calculate the amount for this 5%, and then you have to only find 3 months only. So therefore, you should take 5% times 4,800. So 4,800 times 5%, you get 240. Okay, and 240, you need to find only the 3 months. Okay, you can deduct out the 3 months because they include the whole year. Can you see, guys? They include the whole year interest, which is 240. It's supposed to be only 3 months. So only 3 months means times 1 times 3 over 12. Okay, times 3 divided by 12. Okay, so $60. So inside there should only be $60. So it shouldn't be 240. That means there's an excess of 180. That means you should take 240 and minus 60. There's an excess of 180. There's too much. So your expenses right now is overstated. Okay, your expenses is overstated by 180. When your expenses is overstated by 180, that means your profit is understated by 180. So how to fix this? Therefore, you have to reverse, right? So right now we have to plus this back. Okay, because they minus too much. Your expenses, they minus up too much because before that it was 240. So therefore, you have to reverse. That means you have to plus 180 in this case. Okay, so then you have the answer 38750 minus 4800, and then you plus back the 180 inside. You should get answer 34130. Okay, 34130. Answer is B. All right, so hope you understand this. That's not easy, but yeah, it's doable. So which statement about reducing is not correct? Okay, so it's not correct here. Yeah? So A, they say a lower amount of depreciation is charged in the early years. No, that is not correct. Because for reducing, the first year is always the one that is more. And then slowly they reduce and reduce and reduce. That's why it's called reducing balance. So early year, a lot. Subsequently, then lesser and lesser. So answer is A. The rest are all wrong statement. Okay. 13, the financial year of year end, and he purchased a machine, 4,000, and it was estimated to have useful life 3 years and residual value. All right, so use the straight line method, and then this machine was sold on 1st April. So we bought this last year, 2021, and after that 1 year we sold it for 1,005. So it's just 1 year. So to do disposal, very simple. Remember your 4 steps. Number 1, you must know your CP, which equals to in this case 4,000. Okay, you calculate your total DP. There's only 1 year, so you have to find that 1 year DP. So they are using straight line method. In this case, this straight line method, you must know the formula, which is you take the cost 4,000 minus off the residual value first. You get 3,900, and you divide by the life, right? Working life, so 3. So 1 year will be 1,300. Okay, 1 year is 1,003. So the PFD in this case will be 1,003, and the selling price, we sold it for 1,005. Okay, selling price equals to 1,005. So at the end, it's a gain or loss. So they say it's a loss. So loss of how much? Right? Income statement, IS. So this is a loss of 1,002. You can do the math there. 4,000 minus 1,003 is 2,700. You sell it for only 1,005. So it's a loss of 1,002. Okay, so now on 14th April, just a check, quick check. All right. So on 1st April, commission receivable was outstanding. So this is starting. Okay, this is starting accrual. So how to do this? This is supposed to be the start, and then after that you have the A and P minus plus plus minus. Okay, so your job now is to find the amount of the for IS, because you look at the answer, everything is IS related, and we are dealing with income account. Okay, we are dealing with commission receivable, which is income. And income for IS is always CRIS, right? Because yeah, income statement, the old format, okay, income is always on the CR side. Okay, income is always on the CR side. So you must CRIS. In this case, your answer is either A or B. Okay, so because if you DRIS, then it's expenses. So C and D is already out. So right now, your job is just to find out whether it's 4640 or 5060. So in this case, the amount that we received this year is 4850. So how to use this plus minus minus plus? You must always start with the equation is you start with the money that we receive or pay. Okay, and then plus or minus follow that table, and you get the answer for IS. So this question, there's only one outstanding starting. Okay, outstanding starting supposed to be minus. So just take 4850 and minus off the 210. Then you get 4640. So answer is A. So that's how you answer 14. Okay, 15. There's a PFDD 5%. So 1st Jan starting is 800. 31st December TR amount 01340, of which 600 was regarded as irrecoverable. So how much was the provision for that on 1st Jan 2022? All right. To find PFDD is very simple. Just remember your formula, which is TR times percentage, or another one is TR minus the bad debt first. You recover, then only you times with the percentage. So in this case, we have to use the second one, which is TR minus the bad debt. Okay, so let's take the year end, because they're asking for our PFDD for year end, right? Which is next year. Same lah, just take the year end only. So TR 13400 minus the bad debt, minus first, and you times with the percentage, 5%, and then you get the answer. So in this case is 13400 minus 600, and then you times with 5%, you get 640. So 640 is the answer. So there is a useless information there, which is the starting provision amounted to 800. So that is the starting value, right? Sometimes the question can ask you to reverse and find the TR. In this case, you can do that as long as you know the percentage is 5%, right? If they ask you to find the starting TR, then just take TR, which is X, we don't know, and we times by 5%, and you get 800, right? So in this case, then you should know that TR is how much. Just do your maths here. And then you can also know whether it's increase or decrease. Starting is 800 PFDD, and then year end is 640. So technically, there is a decrease. There's a decrease in PFDD, which is a good thing. It's an income. All right, sorry. Okay, next one will be this is closing inventory over value. So they often ask about this part, and by now you guys can actually remember the effect when there is a over value inventory. So sometimes I just tell myself, closing inventory is like an income to me. Not to say income, but I treat it like income. It's like they have a direct effect. That means if your closing inventory is overvalued, then your gross profit will also be overvalued. Gross profit overvalued, that means PFTY is also overvalued. So your answer must be either A or B. And capital, what capital they're talking about here is the closing capital. So closing capital profit for the year is inside closing capital. Therefore, it must also be overstated. They are the same. Okay, and then profit for the year, this is the next year. So your closing inventory will become opening inventory the next year, and therefore it will be understated. If you're not sure about this part, then please go and refer back to the notes, whereby there is a part about inventory, and also the note shows all the part. Okay, here. Okay, this is the inventory valuation part, and this talks about the effect of wrongly valuing with all the numbers. Okay, and you can see like if they overvalue on the first year, then what happened to the second year? Okay, so it's all here. You can refer back to these notes here. Okay, then to 17. 17, we have Mariam owned a business, and then what was the amount of fees shown in the income statement? So once again, we are trying to find income statement. That means again, we're going to use that plus minus minus plus that one, right? the minus plus minus. Okay, so the starting and the year end, and then after that there is the accrual and prepaid. Okay, that's what I said just now. So we must always start with the money that we paid or received. In this case, money that we paid or received is 2250, 22500. And then starting fees owed by client. So fees owed is accrual. Fees owed accrual starting is minus. So we minus 4500. And then fees owed again, this is year end. So year end accrual need to plus. So we plus 1005. And then the answer we get is the IS answer. Okay, so that's what they want me in the IS answer. So just take this number, 22500 minus 450, and then plus 1500. And you get 19500. Answer is A. For 17. All right. 18. Which item will not appear in appropriation account? So if you guys still remember partnership, inside appropriation account, this is the part 2 of income statement. So you start off with PFDY. And you have to plus this thing called interest on drawing, IOD. And we minus interest on capital. And also lastly, we minus salary, partner salary. And the answer that you get is this thing called residual profit. So as you can see, the answer, which is B, interest paid on loan from partner. So the loan partner interest is actually in your normal income statement, part 1 income statement. Okay, yeah, income statement part 1. So the rest are all inside appropriation account. So answer is B. Okay, next one we have also partnership again. We have Carol and Denise. The ratio is 2:1. That means Carol is 2, Denise is 1. Oops. So Carol is 2, Denise is 1. So Denise's current account is starting 2,000 debit and year end 7,000 credit. Okay, so if you do a current account, the starting is BD on the left side, 2,000, and then year end is 7,000. So the BD is credit now. Okay, always the thing that they give us is always balance BD, right? So BD 7,000. So at this point, if you reverse, okay, work backwards, okay, then you have your CD 7,000 on the left side. That means your profit, right? The profit share. If you still remember current account, what is on the right hand side? Left hand side is all the drawings, interest on drawing. On the right hand side, we have interest on capital. We have salary for that person and also the profit share. Okay, so in this case, the profit share of this current account should be 9,000 in this case. Okay, the profit share is 9,000, but the question is asking total profit made by the partnership. So it's very tricky. So a lot of people will, by this time, they will choose A, but A is wrong then. So you have to understand the question asking total profit made. In that case, how to find that? Because remember that the ratio given, right? So this is not pointless. There's a reason why they give this. So that means we are looking at Denise. Denise is 1. That means the 9,000 equals to is Denise portion. So Carol portion will be times 2, right? So the Carol will be 18,000. Okay, in this case, Carol is 18,000 because it's 2 times Denise. Okay, while Denise one is 9,000. So therefore, the total profit made by them is actually 18,000 plus 9,000. Your answer should be donkey, 27,000. So yeah, it's always very tricky when it comes to calculation. So you have to be careful on this part. Okay, 20. Which statement are correct? So the debenture holder are liable for debt. No, the debenture holder means the people who give loan to the business, right? So 1 is out. Partner is liable. So this is a partnership liable for to pay business. Yes, this is unlimited liability for partnership. 2 is correct. 3, shareholder of limited company is responsible for the company's debt. No, shareholders, they're only responsible for what they invested, and that's it, right? So if the business anything, so nothing to do with them. So answer should be 2 and 4 lah. There's only these 2 left, right? Sole trader responsible for all the debts. Yeah, correct. Unlimited liability. Okay. So what is the correct amount of retained earning? Retained earning is technically something same like your probably for the year. All right, so the draft is 31820, and it was found that no adjustment. Okay, so they did not adjust the following things. So you start with 31820, which is a draft. So commission receivable accrual, they forgot. Okay, they forgot to put back this commission receivable, which is income. Okay, this is an income, and there's an accrual. Accrual year end, we're supposed to plus back, and therefore this is an income, so we should plus the 450. Okay, then what about insurance? What about insurance prepaid? Okay, insurance prepaid, they forgot. That means they forgot to minus out. So you see, the error of not adjusting this is the expenses. If you forgot to minus out the prepayment, that means your insurance will be too much. Agree? Yeah, it's too much. When your expenses is too much, that means your profit now is too little. Okay, it was understated. So to fix this, because they're trying to correct it, right? To fix this, that means you have to go reverse. So you need to plus back. Okay, this will plus back this 175. So in this case, 450 and then plus 175. So you should get the answer, I believe should be 32445. Okay, so answer is donkey. Right, so all this effect question is really important. Which statement about club account is correct? So club account, capital and revenue transaction. The word capital revenues here, they talk about capital expenditure. Capital expenditure, revenue expenditure. So capital is like your NCA related. Revenue is like all your income expenses related are recorded in the income expenditure. No, NCA does not record here, so A is out. B, non-cash transaction are recorded in the income expenditure. Yes, non-cash transaction, that means like depreciation, all those things are no cash related one, they are recorded. So B is correct. C, only revenue transaction are recorded in receipt and payment account. Receipt and payment is money in and money out. So it's not just revenue, but also expenses. So C is also out. D, closing balance in the receipt and payment. This is our bank account. So closing balance is just how much money in our bank account. It's not surplus or deficit. So D is also out. Answer is B. Okay, next one we have what was the total subscription that is related to this one. So once again, this is again another time you see outstanding, paid in advance and all. So this is again, you have to use the plus, minus, minus, plus that thing. Okay, so we start with the money that we received this year. So received this year is 8800. And then starting with a paid in advance. Paid in advance starting we're supposed to plus. So we have to plus 200. And then year end is outstanding. So if year end outstanding, it's supposed to plus also. Plus minus minus. Minus plus minus, right? Yeah, so plus plus. So this one also plus outstanding year end another 450. So your answer would be in this case 9450, I believe. Yep. Okay. So this one is a straightforward question. Sometimes they do give you the IE or IS answer. How do you know IE and IS answer? Then you must look at the keywords like annual or per annum. All right. So this is asking us the total subscription that's related to the year ended. This is the amount that we receive. So make sure you know which one is the info. All right. 34, we have work in progress was value 62 and year end was 54. What was the effect on the cost of production? Okay, so for cost of production, everything is costing. So everything is a cost to plus back, right? Okay, but when it comes to work in progress, we are supposed to see whether there's an increase or decrease. Work in progress is like our closing inventory, like this thing not done yet. If it's not done yet, it's not part of the cost. Therefore, cost minus work in progress. So now we have to ask ourselves whether this work in progress, is it increase or decrease? We started off with 6,200 and we ended with 5,400. That means there is a decrease. There's a decrease of work in progress of 800. Okay, so what will happen to our cost of production? So it's not decreased, but the answer is C. Why is it so? Okay, very simple. So you just do some comparison. Like for example, let's say our early cost is $10. Okay, so let's say before this, we just do a comparison like whether the work in progress now decrease or increase. Let's say we put it as 7. Okay, let's say put it at 7. So let's say 10 minus WIP 7, you will get your cost of production 3. Okay, so if your cost of production, sorry, if your WIP reduce, your WIP reduce means it must be less than 7, right? Less than 7, then it will be minus 6. Then you notice that, oh, my cost of production now is actually 4. So the increase, see the effect of your WIP go down, okay, then your cost will go up. Okay, so that is how it works. So answer is C. Can. All right. So next one, 25. What was the cost of sales? Okay, so given this is manufacturing again, so cost of sales. So you have to understand that cost of sales include cost of production, which is 34500, and then we need to opening finished goods is in there. We need to plus 4200, and then you need to minus your closing finished goods, which is 3600, and then there's a purchases of finished goods. You need to plus purchases finished goods, and you get the COS. Okay, so in this case, the calculator 34500 plus 4200 minus 3600, and then you plus 15,000. Then you get 366. So answer is donkey. Easy. Okay, 26. So they give us a margin. So every time you see a question like this, when you see margin, remember sales is always 100%, right? So the formula for margin is technically GP over sales. And when you see 25%, that equals to GP is 25 and sales is 100. Okay, sales is 100. And please always remember the main framework is sales minus cost of sales, and you get equals to GP. So which means if you put back all the ratio here, GP is 25%, your sales is 100%, your cost of sales equals to 75%. Okay, so since they give us sales and sales return, therefore we can take sales and minus sales return, you can get your sales, and sales equals to 100%. So which means 1700 minus of 6,000 sales return, we get 164,000. So do your ratio here, 164, your sales, net sales equals to 100, and COS equals to how much? Here is, we know is 75%. Right, so do your ratio here, you calculate first, take 164, divide by 100, and then you times by 75. So our COS is 123. Okay, cost of sales is 12300 for cost of sales. Okay, but right now we are trying to find closing inventory value. So they give us purchases. So to find COS, right, we have our purchases, which is 12900, and then minus closing inventory, which we don't know, and equals to COS 12300. So you do your maths here, right? Do your maths here. Technically, closing inventory will be 6,000, right? Just minus off only, get the answer 6,000. So that's how you do incomplete record topics. Okay, and then again, this is another one. So this is the inventory turnover. So they give us opening and closing, and then the rate of inventory turnover. So the formula for this is COS divide by average inventory. Okay, equals to, okay, it will equals to the rate. Okay, equals to the rate. So right now they're asking us for purchases here, not asking for COS. So first you have to find average inventory first by taking 68,000 plus 6,000. Then you divide by 2. So you get 6400. So take 6400 times 5, because average inventory is 64, rate is 5. To find cost of sales, 664 and you times 5. And you get 32,000. So cost of sales is 32,000. Since we have opening and we have closing, therefore we can find purchases, right? 32,000 is your cost of sales. Okay, so to find purchases for the year, okay, you just put it back your equation 6800 plus X, because purchases we don't know, and we minus closing, which is 6,000, will equals to 32,000. So therefore purchases will be 32,000 minus 6800, and we plus 6,000. And you get the answer, which is technically minus of 800 So 31200. Answer is B. Voila. So that's 27. All right. Then now we have a profit margin. So the profit margin formula is PFTY. So we take PFTY over sales times 100. Okay, over sales. Sales, another word is revenue, which is this one. I need to times 100. So how to find, because PFTY is not given, but to find PFTY very simple. Just take gross profit minus expenses, right? Just take GP minus expenses, you get your PFTY, that is 8,000. So 8,000 of your PFTY over revenue, 80,000, and then times 100. So technically, 10%. Okay, 8,000 over 80,000. So that will be 10%. Okay, 29. What was the return on capital employed? So capital employed formula, okay, it will be PFTY. Since this is not LLC, so just take PFTY and you divide by capital employed and times with 100. Now, capital employed, there are two different formula for capital employed. One is you take total asset minus up current liability, but I don't think we can find anything here. Okay, since it's only working capital, so there's no non-current asset, and the other one is given as capital and NCL. So the other formula is actually NCL plus with capital. So we are supposed to use the other one. So technically the answer will be 24,000. 24,000 and then divided by capital plus NCL, which is 150,000. And we times with 100 to get our CE. Okay, if you do your maths here correctly, it will be 16%. If I'm not mistaken, 24,000 divided by 1500, and yeah, okay, times 100, 16%. Okay, then 30. So they're trying to issue statement of account each month. Which ratio do you think that they want to improve by doing this? Of course, statement is to remind TR to pay us. Of course, if they pay us, then current ratio will up, liquid ratio will up. But I think the main thing here is that you want TR to pay. So ultimately, the best answer in this case will be trade receivable turnover. So that is the best answer. Okay, so the answer is donkey. 31. So the rate from 10 times in year 1 fall to 8. So for inventory turnover, the more times is better, because it means how fast we actually get rid of the old stock and then buy a new one. So the better, the more the better. In this case, so they're asking why is it there is a drop. So in this case, a fall in demand, because answer B, C, D are all supposed to be better, right? More things, higher sales, lower interest level means like less stocks. No, it's A. Okay, so now we have Maya annual revenue is 100,000, gross margin 45, profit margin this thing, and then what happened to Maya cost of sales and expenses in year 2. Okay, so by just looking at comparing with the gross margin, first is 45, second year is 40%. So the gross margin drop. If gross margin drop, there's only two reasons. I mean, it's either your sales drop or your cost got higher, right? In this case, when your cost go higher, you earn less. So cost of sale must be increased. Answer is C or D. Then how to see expenses? Now you see profit margin is 5%, one is 3%, but you cannot just based on this. You cannot see 5 and then 3, then it drop. Doesn't work that way, because expenses have to take the GP, okay, take the gross margin minus, okay, because the in between missing one is the expenses, right? GP minus expenses, you get your profit margin. So in this case, the missing in between is actually the expenses. So we want to see what happened to expenses. So from 45 to profit margin 5%, 45 to 5, the first year was 40. Okay, the first year was 40%. From 45 to 5%, so 40% goes to expenses, whereas 40 to 3 is actually only 37%. Okay, it's only 37%. So actually in second year, the expenses has decreased, not increased. Sorry. Okay, so in year 2, gross margin 40, gross profit margin, so 40 to 3 is 37. Sorry, in that case, that means they control they control better, right? They control better, yeah. Therefore, it decreases. 5 to 3, 40%. Okay, that means if you just take 5 minus 3, people might still get the same answer here. Good for them. But you shouldn't take the PFTY and then compare like this. You're supposed to take the difference and see for yourself, okay, for the expenses part. Then after that, 33, why would a bank manager want to know the financial statement? So definitely bank want to see whether they can cover the loan interest or not. The rest all are nothing to do with the bank manager one. Okay. 34, revenue should only be regarded as legal title. So this is the one that under realization or the principle one, you better be familiar. And lastly, this is the accounting policy. So the information provided must be capable of being independently verified. This is under reliability. So reliability is not just free from bias and errors, but must also be capable of independent verified. Means like this thing is so reliable that you don't need other people to tell you that this thing is legit or not. Yeah. Okay. So like audited accounts are all like they are verified already by the professionals. Yep, that's it. So therefore, I'm done with May June 2022. Okay. So all the best, people. Bye.